Hello and welcome back to another episode of Finance Agents Live. Today is episode number 34, and it's exciting. Jesus plus one. It's exciting because it's not just episode number 34 and an exciting episode. It's also the first time we've ever live streamed to Facebook as well as YouTube. So I expect to have made about 3 or 4 mistakes. If you're on Facebook and you see nothing, or I'm super loud, or whatever. It's a first time. It's a first time. So anyway, getting into this, today is episode 34, and on today's episode, we've got a real live banker. We tricked a real live banker into our office. He's never heard of us before, and we're gonna ask him some. I'm just kidding. We're gonna be. I'm kidding about the not knowing us before, but we're gonna be asking him questions. This show relates to our bankers marketing group. The Bankers Marketing Group are people that work with us who go out to banks on a daily basis asking for bank turndowns. And since you will probably know, we're in the finance business. We help people get loans. The banks turn down awesome candidates for loans all the time. And so it's a great way for us to get new opportunities. And we've got a whole group of people that just do that. That's their whole stream of business. So in order to add something to it, we brought a banker into the office to get some questions answered from the other side of the fence. So if it's your first time here, then I would say join the conversation permanently. Go subscribe to us on YouTube. If you're on Facebook, I hopefully will keep streaming on Facebook, but you never really know. So go to YouTube, subscribe, and your likes and subscriptions help us help more people just like you. All right, with that said, let's go ahead and jump into this. First of all, to my left is Rhoda, who's been on a lot of shows with me, so you will recognize Rhoda. And then next we have Brian from Not Named Bank, right?
Yes,
we're going to maintain a little bit of anonymity so he can answer totally true. He said he would have answered truthfully anyway, but just in case, or just keep all you people from calling him because we like him. So he's going to be in here answering questions from the other side of the desk, if you will. All right, now if you've never heard of the Bankers Marketing Group or you haven't heard of Finance Agents and you want to learn more about what we're doing, this whole process started with David Krantz. You can go back and watch an episode that we did, I believe it was episode number 11, Finance Agents Live episode 11, where David told us how through his career he's able to fund over $500 million in funding using this process, going into banks and asking bankers for their turndowns. So we did that episode with David. Shortly after that, our first partner from one of our member offices, Don Kelly, he went out and did bank visits, and then we interviewed him on another episode. That's our special Black episode because you can watch it and it's audio only. It's a lot of fun. But feel free to go watch both of those episodes to get a lot of background. We've also I did another role play one with David where we went through the whole process. And so this is now, we've been talking to you about it. Now we're going to get a little bit of interaction with an actual banker. If you're new to the group and you join the group, you can get a bank flyer. That'll be something that you can take around to the banks with you when you go. All right, so without any further ado, oh, and don't forget, if you have questions and you're on YouTube, then type into the chat box any questions you have, and if we like them, we'll say them, all right? We'll ask your questions live to a real live banker.
It sounds like we're going to catfish him the way you keep saying real live.
Real live as opposed to the fake ones that we normally have on here.
Like we're catfishing.
If you are on Facebook, we also have that.
We have the Facebook group, is that what you're saying? Yes. And don't forget about our Facebook group, facebook.com/groups/bankers marketing.
I was going to say, if you're on Facebook and you're watching this, we also have comments.
Okay, you can comment on Facebook too. I just won't see them. Maybe Darren will. Darren. All right, so yeah, join the Bankers Marketing Group if you're not in there already. If this is something you're interested in learning more about, you want to get the flyer, you want to do it, go there. Anyway, lots of places to go. All right, so Darren, you skipped to number 2, I think. There's the first one. Thank you. There you go. All right. First of all, first question. Are you ready?
Yes.
All right. Well, let's get into this. First of all, thank you very much for coming in today and being our guinea pig.
Do it.
All right. Awesome. Okay.
As long as it goes well.
Yeah, it's gonna be amazing, man.
Fault if it doesn't.
Yeah, I'll take all the responsibility. All right. So I'll ask the first question, then Rhoda, you ask the second one. All right. First of all, in your role, so why don't you don't say the exact bank you're with, but what is your role So before we can get to these questions, what is your role? What's your title?
Sure. So I'm a business development officer at the bank that I work at, and my role is basically to find and bring in new loans for the bank to fund. It kind of is the first step in filtering out which loans will work and which loans will not work for the bank.
Are you working more directly with referral sources or direct clients, or what's the mix for you?
It's probably mostly referral sources and some direct client as well.
Okay, great. All right, awesome. So, and that leads to my first question. You are talking to people all day long about their deals and whether or not it's something you guys can fund, whether or not it's a good deal for you guys. So, how frequently do these people that you're talking to ask for referrals back, ask for your turndowns?
Actually, fairly infrequently.
Infrequently.
They do not.
What's infrequently?
Maybe once or twice a week.
Once or twice a week.
And
okay.
I talk to quite a few people. I'm literally on the phone all day long. And most of the brokers or other bankers that I work with do not specifically ask for referrals.
Okay. Do the people that ask the referrals tend to fall in a certain category, or is it just random? You never know.
Random, never know.
Okay.
Yeah.
All right. Good. Okay. You're up, Rhoda.
Does your bank allow for referrals, or is it prohibited?
So we can make referrals. Banking policies will kind of vary between banks, but we can definitely refer those out.
As far as policy, is this something that you guys have talked about? I mean, has it been a conversation, staff meetings, or?
Quite frankly, no.
Okay.
We've not had any direct meetings on it, at least at my bank. Maybe, I can't speak for every bank, but maybe other banks have had these types of conversations. I think there are certain banking regulations that we have to be wary of, protecting client interests and their information and things like that, and other conflicts of interest that we might have. But other than that type of stuff, yeah.
Okay. So as far as you know, there's no bank policy that prohibits referrals.
Correct.
When somebody asks for your referrals, is it annoying? Is it a problem? Some people that are thinking about doing this are worried about going in and bothering bankers.
So I'd say most of the folks that ask for referrals from me are folks that I work with on a semi-regular basis.
Mm-hmm.
However, there are new people that I meet all the time, both at conferences or on the phone. They cold call me and we chat a little bit. Typically the conversation kind of goes, hey, they want to know what I do, so I ask them a little bit about what they do, and then that kind of naturally just leads into me finding a home for loans that I can't do.
Okay, great.
One of the things we've talked about earlier, I'm going to jump out of turn, is the reason a lot of bankers maybe are reluctant to send referrals is they don't want to lose that depository relationship from their existing clients. Do you worry about that, or you are happy if they get funds somewhere else as long as they keep their deposits with you, or how does that work?
So at my bank in particular, we don't, since I'm doing mostly SBA loans, we don't typically request the depository relationship. So I'm sure at some banks who are seeking that and are worried about losing that, you might run into it. But at the same time, I've also come across a number of bankers who, quite frankly, it doesn't matter that much to them to the point where they would not want to send a client on to somebody, because ultimately if I have a happy client and I can send them someplace and they get what they need, they're more likely to come back to me anyway.
Okay, great. All right, Darren, keep rolling.
Number 4.
Waiting for 4. Scenario number 4, please. All right, who would you never refer to if you were gonna do? If you had somebody contact you, not just like besides Rhoda, not just maybe the craziest, but what are some of the things that someone could say in asking for referrals that would make you think, I don't want to refer to this person. That sounds...
Really, other than an absolute jerk, that I'm working with, I'm happy to refer business to almost anyone that has a product that will fit the needs for a client. Honestly, I don't have, there's not really one thing that people would say or do where I would not want to refer to them.
What about particular types of funding programs? Maybe there's funding programs you don't like, or or that you find are competitive to, like if it's another SBA lender, is that a problem?
I would be hesitant to refer to another SBA lender unless it's somebody that I trust and I know and have a relationship with. Only because, there would be some concern that they might poach the client or poach that business. But really, that's...
What about things like credit repair or just other sort of somewhat related?
So, along those lines, I'd say as it relates to the product type, I want to make sure that it's something that's going to be helpful and positive for my client. So if I'm going to refer that business to somebody that has another lead source or loan product, I want to make sure that it's actually going to work for them and that it's not something that's going to trap them into some sort of predatory environment, whether it's another loan scenario or some sort of tax assistance or something, any one of those products.
Okay, like for example, specifically, you have daily payment loans. Some people think that they're bad. There's a lot of people that wouldn't qualify for a traditional bank loan or SBA loan that might end up qualifying for daily payment loans. If somebody only did that, some of our offices specialize in different things.
Sure.
Somebody only did that, would you see that as a negative where you wouldn't want to refer to it, or?
While I do, I do think that those loans are, they can be really difficult for borrowers. At the same time, if they can't get any other sort of loan and they need that, then that's kind of all they're left with. And so in that scenario, that does work for them. I think that when I want to refer somebody, I want to find something that I think would work for them with the, that's going to be the cheapest ultimately for them. And it's not going to cost them an arm and a leg and a child. And
arm and a leg is fine, but the child, it's
I
crossing
stop
the line.
The child. But as long as it's something that's going to work for them, I don't want to immediately go to the the bottom of the barrel, so to speak.
Yesterday, I know when we had talked about sending a deal to us, you had asked about rates. Was that more so you understood our rates or so that you could set the client up for what they were qualifying for? Because sometimes I think bankers say, what are your rates? And then maybe the person in the marketing group is like, they want SBA rates, but this is not SBA rates. You understand that.
Yes,
and
I understand
you're more
that.
like setting up the sell for the agent.
Yeah, a lot of times, so if someone's coming to me for an SBA loan, they kind of have a range of rates that they're looking for. So if they can't get my loan, I immediately know that, well, they're probably not going to get a loan that's going to be within the range that I offered. So obviously the next step is higher than what I offered. So most of the time when I'm asking or I talk to Rhoda and I say, hey, what are your rates on X type of loan? And she tells me it's mostly to prepare the client for it and to start that whole ball rolling for them to be ready to sign up for something like that.
Great. Who do you refer to right now? Not specifically, but what? Besides us, of course. But what kind of lenders do you refer to, or?
So I will refer to hard money, bridge lenders, equipment lenders. I've sent stuff to, and then sometimes folks, quite frankly, don't quite understand what an SBA loan product is. So oftentimes they're looking for more of a commercial or a conventional loan or something like that. So I've even sent people that route as well.
Okay. All right. Great. Darren, back to 6. We're all over the place today, man. All right, your turn. Go.
Can I pay you?
As far as I'm aware, yes, but it depends on the loan product.
Okay.
Really? How so?
I'd have to double check, quite frankly.
Okay. All right. You're not sure.
I can't speak to that one too well.
We just want to give you money in an envelope. Is that okay?
I would appreciate it, but there are limits to what we can take as a banker.
Okay. All right. So if you're spending all day long looking at opportunities, talking to people, you get a lot of opportunities that come across your desk. How many of those do you think you decline? And I'm assuming there's a lot that you decline where you say, don't even send it to me. That's just outside my scope. So there's no ways, and then there's full apps that come in that you can see are not going to work. What's a guesstimate on that per month?
Per month, I'd say at least 5, maybe between 5 and 10, depending on how busy the month is. And a lot of it can vary based on how long I've worked with a lead source. So if I've only worked with a particular broker for a month or something, they've only brought me one lead, chances are that lead's not going to work, quite frankly. And
right.
It's not until second, third, fourth that we both start to figure out, okay, what do I need to tell him so that he can start the filtering process earlier on before it gets to me.
Okay, great. You're up.
What type of deals do you not get? I don't really get that question.
You don't get it? What kind of deals do you get? So you're an SBA lender, so do you see more of something, or what do you never see? I mean, are you never seeing equipment deals, or what? This is more just a specific thing about you.
Yeah, I kind of see a broad spectrum of everything, only because my bank in particular is more aggressive than a lot of SBA banks who only want a real estate-based transaction. My bank will go into unsecured territory and do a business-only or equipment-only loan or working capital-only loan without any sort of collateral to back that up.
No collateral?
Yeah.
Okay. That's nice. All right. Somebody's asking, one of our, Stan is asking, could you become a finance agent? What that means is, could you sign up in our portal? Generally, I think what he's asking is, can he be paid, which is what we already asked. But as far as do you have any idea if there's any prohibition to you signing up in our portal as a finance agent so that your referrals you get paid for? That's pretty much, you already answered that one, right?
Yeah.
Okay.
Kind of already answered that one, but assuming there's, it depends on what that specifically means. I mean, we would have to go through it, but assuming it's not another job or anything like that,
right?
It's not going to be in conflict with the bank, then
okay.
I would assume so.
Great. Rhoda?
I think he answered that one.
Every time.
I know, but
all right, she didn't like that one. Go to the next one.
We talked through that.
Go ahead. You take this one.
Tell me about the recent deal you turned down that we talked about yesterday.
Okay, so I had a recent deal that was a real estate-based transaction. This one happened to be in the kind of assisted living, skilled nursing, adult daycare industry. And that one got turned down, quite frankly, because when we consider a loan on the SBA side, we need the business itself to be able to support the loan payment. So if the business can't support that loan payment, then we can't really look to too many outside sources to support our loan payment. We kind of have to focus on the business. So this one in particular didn't quite have enough of a debt coverage ratio that we look for. So it's not going to be an SBA loan, at least at my bank.
If we had somebody with like 3 stacked daily payment loans that is obviously paying a huge amount of money, and that cost would drop considerably if it was a termed out loan. Is that something that you guys would consider? Because I know you're looking at what cash flow is left in order to make the payments, but do you consider the reduction? I mean, their debt servicing might go from $80,000 a month to $8 million.
Yeah.
So that's something you would look at?
Yeah, definitely. We will take that into consideration, and when we're looking at their tax returns, their profit and loss statements, excuse me, we want to make sure that all that interest that they're paying on those loans, we can actually add that back into their bottom line to kind of boost the bottom line and ultimately show more profit for us to
Just interest or also principal? Because those daily payment loans will pay back in 6 months.
Just interest.
Okay, just the interest, not the principal repayment.
Yeah.
Even though with them it'd be 6 months and you it might be 5 years, it would just be the interest.
Yeah.
Okay.
Because we're going to take into consideration the principal if we take it out and refinance it. So that we'd only
That
be looking
one
at
we
the
did
interest.
do.
Yeah.
It was 3
we had that.
debt consolidations. We did that.
Okay. Yeah, tell us about that deal. Tell us about your debt consolidation deal.
There was a bakery, and they were moving to a second location, and they'd been looking for a location for several years, and there was a lot of reasons why they took a long time to expand to their second location, and then finally this location popped up, and they needed to move on it. And so in order to do the build out, they got 3 cash advances very quickly to get all of the equipment, and then we refinanced all of that later with the SBA, which took a little bit longer.
Okay.
So in that type of scenario, kind of going back to one of our previous questions, that's where I think a cash advance can be helpful, because an SBA loan can take 30, 60 days, maybe longer, depending on how quickly our borrowers can move on things and any other third parties that the deal depends on. So
yeah, like if they have to have their accounting completely redone by
Right.
CPA.
yeah,
Which was a problem.
exactly. So that drags something out, another 2, 3, 4 weeks. So in the meantime, these people need money now, so they got to go with the short-term payment option, and then we can refinance that out once we actually get to the end and are going to fund.
Okay, great. We're getting some questions coming in. What do you want to know about a person asking for a referral? So let's say it's a brand new person, you don't know them at all, and they say, hey, can you refer deals to me? Are there specific questions you would ask, or what would you want to know?
Yeah, so I would want to know what kind of program it is that they work with, obviously the terms of the program, maybe a little bit of background about the individual that I'm working with. I know that it's not going to depend so much on their how long they've been in this business, because I realize that there's going to be new people a lot to this type of business and getting new leads, but it would more depend on, I want to know who I'm working with, what they've done, what types of transactions they get on a daily basis, what are they seeing, and what is it that they're looking for, what's kind of their little credit box, so that I can plug into that credit box, so to speak.
All right, do you have a list of people you refer to, or it's basically just in your head, is my guess, right?
It's kind of in my head, yeah.
Okay.
I have probably maybe 2 or 3 people that I work with that I know have other loan products, and so I will typically just throw stuff out to them.
All right, so 2 or 3 people. That's Rhoda,
Rhoda,
me,
yeah.
David,
Exactly.
maybe Darren. All right, perfect.
There you go.
We
They're
get the whole
all in
list.
this room.
All right. Do you think it matters if someone comes in person or if they call you on the phone? I know you work with way more people over the phone than in person, so this one might be a little bit different answer for you than someone else, but what do you think?
So I definitely think in-person meetings are the way to go. Only because, even in my own experience, when I'm out there trying to source loans, it's much better to get in front of someone's face and have a conversation. They can see you, interact with you, get a better feel for who you are and what you do. The conversation can be much more natural, in my opinion, and it's easier to build a trusting relationship there for someone to want to send business out to you when you're in person, as opposed to over the phone. I mean, I do it all the time, like I said, like you said, on the phone, but there's several people that I've met, for example, in the last couple of weeks. I've met them in person, and now they're at the top of my list in my mind, and so if I get something that fits what they do, I'm going to send it to them, because they.
He means she.
He means
She.
us.
He
means
He
us.
means us because he's
Because
in
Rhoda
here.
has,
I don't
met
know what
me
he's
in
talking about
person.
right now. He means me.
How much does it matter that Rhoda made you cookies today? Right.
That will go a long way.
That's a big box of cookies, by the
Yeah.
way. Darren, bring that over here. I want people to see how many cookies. Is that all for him? I'm not complaining. That's awesome.
A family.
I'm a
and
little
my
jealous.
kids will,
I'm not gonna lie. Look at this.
Here we go.
That's
Right
a
here.
whole. Are you gonna eat one right now?
Jumbo cookies.
Those are huge.
I'm gonna
Look
forego
at
for right
those.
now,
Those are
but
amazing. Anyway,
they're
yeah.
incredible.
So don't you wish you were on the show? You come
Well,
into the
my friend.
show and you say something really
Yes.
nice to Rhoda. Maybe she'll make amazing cookies for you too. All right. Well, I think that's most of our questions. I mean, now we might as well just talk about it a little bit. But have you ever had somebody ask for referrals that you just thought was really weird, and you just
Yeah, I have, and I just don't call
That's
that
also
person
me.
back or deal with them that much.
okay? Have you ever had a bad experience referring somebody out?
As of right now, I personally have not. There are other bankers that I work with who have had bad experiences, and quite frankly, once that happens, those people are no longer on the list.
Right. What kind of bad experiences have you heard?
Really, it's miscommunications when it comes to expectations. So saying one thing and then reality is something different. And I have to throw in a little caveat because I've done this to Rhoda with loans that she's brought me sometimes, only because it's difficult to control your back office. And that's also something that we realize. It's tough for you to dictate and set expectations when there's just sometimes unforeseen events that can occur with back office folks or with whoever it is that has the actual loan product and the fulfillment on the product. So while that is often the case, trying to set some reasonable expectations, and again, it kind of goes back to the kind of relationship that you built with somebody. If you have a good relationship, those sorts of things can be, glossed over more
Great.
easily.
Tell us about a time you referred a deal out and you happen to know that it got funded. Just maybe something about the particular client.
So, yeah, it always is helpful for when I'm sending out a deal. I'm trying to think. I've sent one out recently. It hadn't gotten funded, but we got close, and it was just a solid individual I was working with. They knew what they were doing. They set good expectations. They kind of walked the borrower through the process really well. So that's kind of what got that.
What kind of client was it? What killed the deal? I mean, what type of business? And
Ultimately, if I'm remembering correctly, I've got a bunch of deals on the mind right now. I believe this one was a pharmacy, not a pharmacy that we've talked about.
this is
but
not the pharmacy we
a
were talking about,
different-
because
a
I was going
different
to
one.
ask about that
And
one
it
next.
was,
We have a lot of pharmacies.
yeah, I kind of see a lot of different types of asset classes, but yeah, this one in particular just didn't work because ultimately the lender just could not quite get comfortable with it. It actually is kind of a similar scenario to what
Really?
we're talking about. The lender just couldn't get comfortable with the borrower and their current situation.
Okay. Rhoda, why don't you talk about a couple of the referrals that he sent to us?
Okay, I'm going to do that, but I got a question first.
Sure, do your thing.
Do you find it's best, I know we've talked a lot about pharmacies, do you find it best when people specialize in a certain industry or a certain type of financing that they refer to you, or do you think it's better for him to be very broad and go in and talk to a banker about everything?
There's kind of two sides to the coin.
Right.
Obviously, when you are focusing on a niche or a certain vertical, then you can really own that vertical and get to be someone kind of a go-to person. When someone thinks of that, they think your name.
Right.
But at the same time, I mean, I myself, at least at my current bank, have kind of become more of a generalist just because that's what my bank can do. We can pretty much do a lot of different things that other banks will not do because they are stuck in their verticals. So I think it really depends on what your loan products look like and whether those are more tailored towards a certain, going after certain verticals, or whether you can really just get into general types of loans.
The people that refer to you, do they tend to be specialists in certain things or more generalists? What do you see more of? Or would you even know?
They're mostly generalists,
Okay.
frankly.
Okay. All
Someone
right.
specializing in hotels or pharmacies or.
While I do have a few of those guys that refer over to me,
I think you have a pharmacy person.
Yeah.
No,
Yeah.
we have
my
a
guess.
pharmacy person.
It's beneficial for them only because they've gone at it for so long in that one particular vertical. So
Okay.
that's why it works for them.
Why don't you talk about the other pharmacy that we were talking about before, Rhoda?
Yeah,
No? Okay.
I can
Yeah.
I can go at it. So this particular pharmacy had they were doing some construction, and unfortunately they were slightly underfunded on their construction. So
They're still doing the construction? Because
they still had to finish
so
up.
they had an SBA loan,
Yeah, they had an
and they had
SBA.
already become operational.
Uh-huh.
But they became operational before. Did the SBA loan fund the initial construction?
Correct.
And then they wanted to do more construction? Is that?
They just needed to finish up a few small items.
Okay.
So it went over budget, then what?
Went over budget.
Okay.
And then the bank, unfortunately would not continue to lend. So they were looking for another source of capital to finance the rest of the stuff they had to do. Unfortunately, because of their situation with the existing loan and that being cross-collateralized on their house, and then having to take out some other shorter-term loans all together,
And then
it
they
was
sold
just,
their house?
and then sold the house. So yeah, just a quick caveat: if someone's cross-collateralized their house, if they sell that house, typically that bank is going to take that money into an escrow account, and it's kind of earmarked for the bank. so
Super
to speak.
convenient.
Which is
If you're
really
like
convenient. Yeah, if
trying to
you're
get some
looking
money.
at do stuff. So
Wait, so let's go through. So SBA loan to begin with,
uh-huh.
then got some other small financing, including a bunch of personal loans,
Yes.
and was then trying to figure out how do I get more financing, maybe an extra couple $100,000 to get them
Yeah.
over the hump.
Yeah.
If they had come before they got the personal loans, do you think they would have been able to get more business funding? Because now their personal credit is reduced because they stacked up a bunch of.
Yes.
So they would have been able to get more funding if they hadn't. So yeah, getting the personal credit cards and personal loans is kind of the kiss of death for cash flow because it pulls your FICO score down.
It pulls your FICO score down, and now we have to take into consideration these additional loans, right? So when we're calculating, when we're looking at kind of the global cash flow, we want to see, okay, this business was a startup, so they didn't have any income coming in. They had a lot of loan payments, and those loan payments kept increasing as they got more loans. And so all of that together was not a good scenario, and the bank just wasn't comfortable with that level of risk.
Okay. Now somebody's asking, what is it that you guys won't do that we will do? And I'm not going to go into a lot of detail, but a heck of a lot, right? We could do retirement rollovers. We could do private money loans, as like hard money lending, which is one of the things he refers to. We have types of startup financing that are not SBA. Since he does primarily SBA conforming loans, people have to have solid tax returns, business and personal, plus collateral. I know you said you don't require collateral, but what percentage of your deals have collateral versus don't?
Probably at least 60 to 70%.
Have
Have
collateral?
collateral.
Okay, so it's still a factor, even if it's not the last factor. What about equipment financing? I mean, you'll do equipment that's a part of the SBA, but there's probably some that you wouldn't. If somebody has one SBA loan, can you get a second SBA loan on the same business? I don't think so.
You can.
Oh.
You can get a second SBA loan on that same business. It's just not very enticing for the bank to do so, because then they're coming in second position behind the first bank, and they, if anything goes wrong,
Nobody likes that.
That bank, the first bank, is going to obviously be in first in line.
Okay, so those are all situations where we have options where we can help people. There's a lot of stuff and stuff that I haven't even said. So there's a lot of things, and at this particular pharmacy, I believe you referred that one to us.
Yeah.
Right? But at that point, they had no assets anymore because they'd sold their real estate. Now it was their owner-occupied real estate. That would have been hard anyway. Personal credit was already maxed out and bringing their scores down. Business loans, they were pretty much maxed out. I mean, maybe we could have looked at equipment finance, but they really just needed some extra construction capital. If they have a retirement account, we could have done a retirement rollover. I'm assuming they didn't have one. They had stocks and bond portfolio, you could have done a loan that way, but normally you don't see somebody max out their personal loans if they have $100,000 in stocks and bonds. Normally they sell their stocks. So there's a lot of things that we could have done.
Yeah, so I actually think with you saying those those loan products, the retirement account loan, that is actually a pretty cool one, I think, because at least with a lot of folks that I look at, if they do have retirement funds, the bank looks at that and will give that, some level of credit, but it's not going to come into play when we're looking at it as far as liquidity goes. So
they
a
can't
lot of times,
collateralize it. Right.
We want to look at and see, okay, how much cash does a borrower have in the bank? But if they have most of their cash in a retirement account, there's not too much that we can do. So that's where a retirement account loan would be very handy.
Right. Yeah, we often use that for the capital injection in order to get an SBA loan. So that's a good. So there's a lot of good options, and some options where he could send them to us for that and still end up getting the loan when before he wouldn't be able to do the loan himself. So, all right. Anything else, Rhoda?
That's it.
No. All right. Well, Brian, thank you very much for coming on. Give you the big
very
shake.
much.
You get the walk-away prize of the cookies. Hopefully you're not on a diet like Daryl. But thank you for coming on. We appreciate it, everybody. Thank you for coming on to our show. Make sure to go watch extra episodes if you're interested in the Bankers Marketing Group. There's a specific playlist. It's listed in the show notes below. You can click on it and you watch 1 through 5 now, 5 shows in a row. We watch this one 2 or 3 times just for fun because it's that good. And then we'll be back next week. I actually don't know what we're doing next week. Wait, next week we're going to be talking about the retirement rollover product. The founder of that company, somebody we've worked with for maybe 6 years now, is going to be coming into the office and talking about the retirement rollover product and how that works, so what it works for and what it doesn't. So that was a perfect tee up right there. You should log on. All right, everybody, thanks for coming in. Again, subscribe, like the show, dang it. And come back next week. We look forward to doing a lot more deals together.